We're going back in another options trade, just so you know. You don't have to know. I already bought at 450. The low is 420. I should have been hit down there. I'm going to tell the trader to put those contracts out at 510 right now, so that when we bounce up toward the 90 penny handle, I'm going to get executed before the option price gets there, and that the public will buy it from me in the hype of the move as the low sets up. And we can see it all right here. And this is the call that we sold earlier. It's the Baidu $70 call in the money. It's a pure octane options expiration. And the thing about it is, we're going to move that over there. We got 5 more contracts to buy on that one at $3.60. Now, what I'm going to show over here is the actual chart. And yes, people, just like yesterday, I'm declining in the 10-minute, and the 20-minute is holding it up here at this 3, 6, 9, 12, 15, 18 minutes. And this is what we're focusing on, is that bottom. And what you want to see is what I was talking about earlier today. You want to see an explosive green candle, a buyer stepping in. That's what you want to see. And earlier, I told Tammy this morning, she might not have been here, but I said if that first solar could hold 112.5, you could be right below 120 on Friday in this equity. And there it is right there. That's my price. And I got people hit. I gave a 112.50 today, and it finally came down and put the final bottom in for a dollar bounce off the low there. Now, these people got to be worried because the 10 minutes declining. So Brian Plain, do me a favor on those contracts. If we break that support level, I want you to put me out 5 more at 320 right now. Okay, then that way, yep, I own all 10 contracts at the right price, and you'll make another market maker profit. That's right, and be selling at 480. Okay. Basically, it's options expiration on Google. You can see on Google that the options right here were 1370. We just bought a couple at 920, and we're 20 cents off the low, but there was only one print at $9. So once again, because of our entry here on Google, and other people need to watch this, we'll show the Google price. Google made a high of 510. They're bringing it down to the $500 strike. We got hit at 920. There was a couple of contracts that went off at $9. The high was $13.70. I don't think that we're retail on the $500 call here, because if you take a look at the SMF market maker trader entry is 920. That's 20 pennies. All right, put these out here. Put these contracts out at 1020. If they get up to 990 and okay, on the first solar trade, all right, damn it, okay, here's the options that we got, people. They were 1370. If our entry is 920, that means that we got $4.70 wholesale. And as Google goes up right here on the 3-minute chart with that confirmation bar, we're going to sell into the strength, just like we showed. It's options expiration, but we're market makers in the option pit. And the thing about it is that as long as the equity keeps blowing through there, then we can get that price. If it stalls, we will dump it and take our profit. So I'm going to tell the trader right now, if I don't walk up on the ask, he's going to throw these out here at 970 if I stall in the equity, meaning that this side of the market needs to go higher in price. And it's starting to. So now he can get that 980 when it gets on the bid. As this goes higher, here it is at 3-minute bar. We're going to exit this contract, and he can exit it because he paid 920. Are you out at 970? Somebody, All right. That's what the trader did. That's what you need to do. Stop it. Put me a bid at 8.5. That's the first move. It may go higher. My next bid, 8.50. Entry 9.20, exit 9.70. That's 50 pennies, 10 contracts, $500, 13.70 the high. We bought $4.70 below the market. We're a market maker in the pit. That's what we do here. That's how we do it. We're just buys all day long. We'll buy again, put the other bid down there. That's the 3-minute Google breakout, and that's how that trade is. Okay, that's good. All right, so basically what we did here in First Solar, Tammy got hit at what price? 112.37. That's 112.36. That's 4 pennies off the low. That's 4 pennies off the low. And at that price level, she went light. She scaled in 100 shares. But once again, the high was 115.89, and she was not a retail buyer. Using the SMF Trader platform allowed her to get 4 pennies off the low, and she's going to make good money on her 100 shares on the way up. And as long as she breaks above that 10-minute, then you sell and take my profit. I'm also selling the calls here. I'm out at 5.50. I got hit. I'm making 70 cents on 10 contracts, another $700. Pyrate it right through there. What this side, here it is. Well, then you should have bet. Well, are you in it, or did you let it go by? All right, we just got executed. Tammy, let it keep me a stop market order. Let it rise. SMF Trader got hit 4 pennies off the low using the SMF system. And we just pennied out here on the First Solar call at 5.50 that we bought at 4.80 on the low. It's in the first videotape. If you're in denial, go back and see our entry and our exit. We'll buy again. All right, Tammy, let's let it move up. 20 minutes, got resistance. Put a stop market at 113.50. It's 47 by 60. Protect your money from that wholesale entry of 112.36, 4 pennies off the low. There's the dollar move. That's how the SMF MMT Trader works. That's our market maker platform. And once again, we sold these out. Okay, bid me that contract again. Bid me 470 on 5. And did we get exited out on the Baidu? Okay, Tammy, I told you. You got a sell wick, and you learned to sell into that. You sell it out. 47 pennies out. Market maker, make me a market. No. You work him. I don't see it out there at 450. I see 60 by 40. Okay, now you're even money. Get down there with the rest of them. What we did was, because of the deterioration right here, is we had a bid we owned at 450. We did not get hit. Some of them did not get hit at 490. And 490, 20 contracts we were selling. So that was 40 pennies. On 10 contracts, that's $400 on 40 pennies. Not bad wages. Ask yourself how much you're working for, getting paid. Okay, here we are. Here we are. Here we are. The bid, 3.40. Because if I break the low, that means the contract is coming down. I took Brian Plain out of the contract at even money. And he's already racked up $1,580 on those earlier videotapes, buying and selling all of his options during this options expiration. Now, if we break the support line, we're going to hit a low in the equity. We're going to come down to 3.40. That's our bid. Once again, look, as we show the public the gift is that the SMF market maker is always at the wholesale bid. And we have showed and demonstrated live entries with live exits during the option's expiration. That's real.